Good afternoon, everybody. This is Dr. Jeff Camarda, of course, reporting from Tallahassee, Florida, this Thursday early afternoon. And I'm here. My dad, my 93-year-old dad, actually, I'm sitting in his office. He's at the doctor with my younger brother, Michael, um, and mom. Anyway, he's not doing too well, so I'm here to spend as much time as I can, but I still need to, obviously fold in my obligations to you guys. So pretty expansive report. I'll try not to take too long today. First, hopefully you all got a chance to watch the tax class that I pushed out last week under the flag of the Family the Wealth Education Institute. Real important stuff. Please, if you haven't, take a moment to actually probably 50 minutes to look at that. But there's a lot of really powerful tax savings ideas in there that we're very happy to help you implement if you have the interest and would like us to do that with you. Next thing, as you know, Dan has graciously agreed to stay on until we find a suitable replacement. We have a lot of really high quality candidates that we're talking to, and we'll miss Dan. He's a great guy, very conscientious, personal friend, and I certainly respect his reasons for the separation. But I thought it'd be important to kind of underscore the way we run the operation and look to maintain excellence and quality. And I use the Mayo model a lot. A lot of you know the Mayo Clinics, what a Jacksonville, I'm a patient there. And I'll remind me to tell you about the new COVID vaccine news for Floridians. Mayo is just an incredible place. They got a lot of great doctors. It's a research hospital at its core. The doctors are more interested in the medicine than the money in many cases. But the reason it really sings is because of the system. If you've ever been there, they've got very elaborate systems, and they check you in. They've got your records. They're all computerized and integrated from various specialties. Even the examination rooms have, color-coded lights on the door so that outside staff knows what's going on. And from the beginning, we've tried to build the Camarda Wealth companies like the Mayo Clinic and rely on really excellent systems. And you look at me as the quarterback or the architect of these systems, but I build them so that I don't need to run them myself. The systems themselves are designed to be self-accounting and to make sure that everything happens on time without my having to micromanage everything, which is which I do more than I like to, but it's not something I enjoy. I don't think anybody does at either end of it. So I look at it kind of as a quarterback. Dan does a really great job, and the other PWAs and the other folks in the team, but we're still able to run an outstanding game, even if we have different running backs or other positions, so long as we make sure we have a very tight playbook and we have quality players on the team, and which is something that we insist on. So hopefully that makes you feel a bit better about that. And again, I want to emphasize that we're coming down to the thick of tax season now. I certainly hope that you consider using TaxMaster. That's another Mayo Clinic, ethos, the expert systems, excellent organization in my view. And it's not an H&R Block, though, right? We're not looking at $200 tax returns, but we are looking to put the time and the intellect in. That's why I go to Georgetown Law tonight from 8 to 10 is to really focus on the most effective ways to save tax. And if you figure it out, and in many cases, it's amazing how much more you can save with a little bit of intelligent thought. The leverage is incredible. Sometimes it's 10, 20 times the fees. You get like 10, 20 times back the cost of the fees. So please do consider that as we approach the filing deadlines here. Another thing, those of you that are in the low millions net worth range, if you haven't set up what I call FBOTs, family bank ongoing trusts, which is a type of SLAT, spousal lifetime access. Anyway, the bottom line is if you're in that wealth range, and the litmus test is if you have not filed an IRS gift tax return for a lot of money, which is a Form 709, IRS 709. If you haven't done that, that money is growing in your taxable estate and will almost certainly be subject to significant estate taxes, in my view, as the legislation, unfolds and affects more and more people at lower wealth levels. So think about that and let us know. Personally, email me, j@camarda.com. Talk to your personal wealth advisor. If you're if you're a TaxMaster client, you can talk to Dr. Veronica Pell or Doug, the CPA, or others that are on that team, and just let us know, and we'll give you a review and a prescription if you want. Another important point, those of you that have set up at our recommendation or others, usually at ours, what I call family health asset protection holding companies. These are LLCs that typically are organized as partnerships rather than S corps for most of you. You got to keep them puppies up. They require an annual filing with the state, usually Florida, which is like $130 to the Florida Secretary of State, and you have to file an income tax return. You've got to make sure that it's not just enough to get the company going. The company's got to properly operate so that if you are challenged, if somebody comes after you, you've got all the boxes checked and can rightfully claim that it's charging when protected, and that your predators or attackers can go pound sand. So if you have those and you're not sure that your Florida state filings have been kept up and you're not filing a separate income tax return, either a 1065 for a partnership, or 1120S for an S corp, that K1s to your personal links to your personal return with a document called the K1, let us know and we can help you clean it up. Let's see what else. A couple of headlines which really say it all. And I collect these as I read them now so I can give them to you in the video. Tax hikes for high earners are on the table in some states. And again, that's going to get worse and worse and worse. Not in Florida probably, but high tax states like Jersey and New York and Illinois. I just talked to a lady there today, and Massachusetts and so on. Be advised that tax is the master wealth skill. Really can make a big difference if you get that figured out. Another article called, this is another one, a stock trading dupe is born every minute. So I'll segue, I guess, into my trading piece. And I'm going to be doing an upcoming class. I can't tell you how excited I am by the investment methodology that we've applied late in 2020 and expect to throughput in 2021. I really think you'll be excited by how much money that we're able to make. I'm very excited. And I'm actually going to do a class on this, hopefully in the next couple of weeks. It'll be another long Family Wealth Education Institute class, but do please watch it. I think you'll pick a lot up and be really amazed at some of the stuff that we've learned and that we are applying to maximize your wealth. Segues, just because it's a frothy market, it is a frothy market. It's overvalued in so many ways. And again, that headline I was reading, a stock trading dupe is born every minute. What the journal's point was is that people are just gambling and they're really looking at what they're buying. They're just buying to buy because they think it's going to go to the moon. It's going to go up, unchecked, and that's never the case. But that said, it doesn't mean that we can't make good money in a frothy market, provided we're very careful in picking our shots and getting in and out at opportune times. So, a lot of you think that because I think the market is overvalued, that we're concerned about participating in. There's one doctor actually up in South Carolina, I hope I talk to you soon about this. It doesn't mean we're not expecting to make money. We just have to do it in a different way, be very, very careful, kind of ride the bubble and very carefully, exploit the ripples that we see there. So please don't misunderstand my concern about an overvalued market with our being afraid to take positions that we expect to be profitable in the stock market, and we have and are, and I think you'll be really impressed by what the results are. All right, so last thing is inflation whispers and the bond market soft. What does that mean? There was a lot of fear out there that inflation may be whipping up. The bond market, I don't want to say cratered, but really took a couple of blows last week. Interest rates have gone up in the papers today. That the home mortgage interest rates are now back over 3%, but which is still crazy low, right? But they were in the twos not so long ago, just a few weeks ago. So the concern is that the inflation may be whipping up, which will kill things like bonds. And I'm going to leave you with this article from the Wall Street Journal, probably probably 10 days ago, I think, maybe not that long, but called "The Money Boom Is Already Here." And the picture, I'm looking at the screen, the picture is got, remember the Stay Puft Marshmallow Man from Ghostbusters? Well, it's got a Stay Puft Marshmallow Man-esque character here, just destroying Gotham City. This is green blob, with a baker's hat on. It's called M2, which of course is a measure of the money supply. I'll show you the first couple of paragraphs. Speculative manias are in the air, as evidenced by the recent price surges for Bitcoin, a digital asset with a fundamental value of zero. GameStop, a declining retailer, along with the other economic trends, a strong economic recovery, and an uptick in inflation. These asset bubbles have a clear cause: the massive expansion of money and credit. Basically, the federal government printing money and juicing it into the economy. Yet America's fiscal and monetary masters, Congress and the Fed, respectively, are turning a blind eye. They're solely focused on mending the labor market with the fervor of messiahs. Federal Reserve Chairman Jerome Powell and Treasury Secretary Janet Yellen tell us the only way to save the labor market and reach full employment is to continue to pour fiscal and monetary fuel on the fire. But their prescriptions and prophecies, modeled on the playbook of the 2008 financial crisis, are not valid today. And I'll leave you there because that was a call from my brother Michael at the hospital, and I better see what's up. Hopefully, it's not bad news. I guess that's it for now. Anyway, sorry to go so long-winded, folks. Hopefully that you get this. It's not our ideal tech, but hopefully you get it. And we'll talk to you soon. Thanks for watching. Bye-bye.